Welcome to this edition of Ethical Sustainable Investment News and Analysis to Profit By. I'm Ron Robbins, an ethical investing pioneer for over 40 years, quoted in the Wall Street Journal, MarketWatch, the Globe and Mail, and numerous other media, and founder of the highly respected global ethical sustainable investing information website, Investing for the Soul. And please listen to my disclaimer statement at the end of this podcast. Now enjoy this podcast. Hello, Ron Robbins here. Welcome to podcast episode 43, published on October 23rd, titled Jim Cramer's Hydrogen Stocks, and much more, and presented by Investing for the Soul. Investingforthesoul.com is your site for vital global ethical and sustainable investing news, commentary, information, and resources. Remember that you can find a full transcript, links to content, including stock symbols and bonus material, at this episode's podcast page located at investingforthesoul.com/podcasts. And Google any terms that are unfamiliar to you. Well, if you live in North America and interested in money, you have no doubt heard of Jim Cramer and his Mad Money Show. Now he's talking up hydrogen. Mr. Cramer is quoted extensively in an article by Tyler Clifford titled, "I'm Bullish on Hydrogen." Jim Cramer breaks down his top hydrogen plays. Here are some quotes from the article. Jim Cramer is now endorsing the stocks of Linde and Plug Power. The first as a conservative play on the space, and the second as a more speculative undertaking. 1. Linde, an Ireland-domiciled industrial gas company that handles production and distribution, is valued by the market at $126.1 billion. 2. Plug Power, based in Latham, New York, produces hydrogen and fuel cell systems with its eyes on industrial vehicles. The stock has surged more than 480% year to date. Cramer recommended waiting to buy Plug Power on a pullback. End quotes. We again have a threesome in one article from the Motley Fool, each recommending a different stock. The article is titled, "ESG Investors Will Love These Three Stocks." Here are their picks, followed by relevant quotes by the recommending analyst. 1. Travis Hyam likes Apple. Companies that focus on environmental, social, and governance issues do so with everything they do. That's why Apple is a great ESG stock. Some highlights of Apple's environmental focus. Apple's operations are already carbon neutral. By 2030, Apple plans to make all of its products and manufacturing suppliers carbon neutral. Apple has nearly 400 megawatts of solar, including on the roof of its headquarters, which is more than any other company in the US. That is, it has the 400 megawatts, more than any other company in the US. 2. Howard Smith likes Brookfield Renewable Partners. Brookfield Renewable has an investment portfolio of over 5,300 power-generating facilities globally. Its ownership and investments consist of hydroelectric, solar, and wind power. Side with a proven winner by investing in Brookfield Renewable Partners, too. 3. Jason Hall picks Steel Dynamics. Conscious capitalism also requires investors put their money in companies making dirty industries cleaner and more sustainable. Steel Dynamics hits the mark. For instance, 83% of the inputs are recycled or internally generated. Energy intensity and emissions are 11% and 13% respectively of global steel production averages. 99% of water is reused and 99% of mill byproducts are recycled. Since going public over 20 years ago, it has trounced the S&P 500 and has a dividend yield near 3% after more than a decade of yearly double-digit increases. End quotes. It's impossible to get away from alternative energy in this podcast, as it's probably the most frequent ESG-related industry covered anywhere. This new article is titled 9 Ways to Invest in Alternative Energy and is by the MoneyShow. Here are some relevant quotes. 1. Edison International. Last month, the California utility won regulators' approval for the largest build of EV charging stations and energy storage in U.S. history. Edison is cheap because of understandable concern about the durability of California's new utility wildfire insurance in a season of record heat. Edison sells for just 11.2 times earnings and pays a yield of nearly 5%. 2. Duke Energy. There's uncertainty about how much North Carolina regulators will approve of its planned investment on power grid improvement and coal ash cleanup. Also, arguably, no U.S. utility has a bigger opportunity to rate base solar than this company. Buy up to $90. 3. Algonquin Power and Utilities and AES Corp. As for companies combining contracted renewables with regulated utilities, the best buys are Algonquin Power and Utilities for the most conservative investors and AES Corp for everyone else. AES's real appeal is in an unrivaled global pipeline of new wind and solar generation along with energy storage. AES shares are now up nearly 30% since July. It's still a buy up to $22. As for Algonquin, new management looks set to continue the roughly 2/3 utility, 1/3 contracted renewable earnings and growth strategy. Buy at $14 or lower. 5. JinkoSolar is the largest solar panel producer in the world, and its global business is booming, with a recent agreement to supply bifacial modules, which produce solar energy from both sides of the panel and generate 40% more power than current mainstream utility products. And these are being sold in Chile and in Vietnam. JinkoSolar went ballistic on enormous volume both before and after earnings. 6. SolarEdge Technologies aims to disrupt the entire electricity grid with traditional power generation. It's a great story. 7. NextEra Energy. Its FPL division serves the state of Florida and is the largest regulated electric utility in the country. But the company's alternative energy segment is its fastest growing business. In fact, NextEra Energy Resources is now the world's largest generator of renewable energy from the wind and sun. And it's also becoming a world leader in battery storage capacity. NextEra is very attractive today. 8 is Plug Power. Yes, again. Its technology is based on fuel cells, which use hydrogen today to generate electricity in the harshest off-grid environments, which power electrical industrial vehicles like forklifts and which will soon be powering on-road vehicles as well. Financially, the company has not yet turned profitable, and there are no profits visible in the year ahead. As for the stock, though, it's hot, hitting new highs. 9. Bloom Energy is a fuel cell stock. The cells generate electricity from natural gas, biogas, or hydrogen to provide highly reliable on-site power to liberate businesses like Walmart, IKEA, Oracle, and eBay from unreliable electric grids. In late June, management disclosed a partnership with Samsung Heavy Industries, which is the world's third biggest shipbuilder, to provide power plants for ships. Earnings are not in sight yet, but the stock has been gaining strength and just recently broke out to a new high, so it can be bought here too. End quotes. There's no doubt that after the US election, infrastructure spending will be top of mind for the incoming administration, and construction industry companies might be a fit for some ethical and sustainable investors. Here's a new article by Neha Shamaria on the Motley Fool site, which has this in mind. It's titled, 3 Top Infrastructure Stocks to Buy Right Now. Here are the 3 stocks, each followed by some relevant comments from Ms. Chamaria. 1. United Rentals. Some notable facts about the company. United Rentals has roughly 30% share in the North American equipment rental market. The company's revenue clocked 14.8% compound annual growth rate between 2009 and 2019. 2019 was a record year for United Rentals, with revenue soaring 16% to $9.3 billion. 2. Brookfield Infrastructure Partners. The bulk of Brookfield's businesses generate stable and steady income and cash flows under long-term fixed-rate or regulated contracts. That is why the company hasn't just paid but has grown its dividend per share at a compound annual growth rate of 11% between 2009 and 2020. The dividend is currently 4%. Brookfield is now increasingly betting on high-growth areas like 5G technology. Shareholders can easily expect double-digit annual returns from this stock. 3. Nucor. This company is the leading manufacturer of steel, a raw material that's indispensable for building infrastructure assets, from bridges and dams to pipelines and rail tracks. Nucor should benefit hugely from an uptick in construction activity. With a 3.4% yield, Nucor is a great stock to own at all times. End quotes. Now 2 stock recommendations from a UK Motley Fool contributor, Kirstine McKay. Her article is titled, 2 Sustainable Investments for 2020 That I Like. Again, I'll state the company, followed by select quotes from Ms. McKay. 1. Halma. Halma is considered a sustainable company because it offers solutions to ensuring clean water and infrastructure safety. I think this looks a resilient company with a solid future ahead. It offers a small dividend yield, less than 1%, and the likelihood of continued growth. 2 is Croder. Croder International is a chemical and technology company found in some top sustainable investment funds. Its solutions are essential to products found in health and beauty, engine lubricants, and plastics. The stocks, that's STOXX Europe Sustainability Index, contains both Halma and Croder. End quotes. Well, these are my top news stories and their stock and fund tips for this podcast, Jim Cramer's hydrogen stocks, and much more. To get all the links, stock symbols, or to read the transcript of this podcast and more, go to investingforthesoul.com/podcasts and scroll down to this episode. Also, be sure to click the like and subscribe buttons in iTunes, Apple Podcasts, or wherever you download or listen to this podcast. And please click the share buttons to share this podcast with your friends and family. Let's promote a better world through ethical and sustainable investing. Contact me if you have any questions. Stay well and healthy and conscious about the sustainable values of your investments. Thank you for listening. Talk to you again on November 6th. Bye for now. Learn how to create a simple portfolio reflecting your personal values by taking my 1-hour tutorial. Go to investingforthesoul.com/podcasts and click the link in the right-hand column for my DIY Ethical Sustainable Investing Pays tutorial. Now, I'll mention in the podcast if I have any direct interest or holdings in companies or securities I'm talking about. Furthermore, any news, opinions, analysis, or other information offered by myself, as well as references and information to or from other external sources in this podcast, is provided as general market information and should not be relied upon and thus does not constitute investment advice. Investors should consult their own licensed investment professional before making investments. Also, I will not accept liability for any loss or damage, including without limitation any loss of profit, which may arise directly or indirectly from use of or reliance on information in this podcast. Do contact me at ronr@investingforthesoul.com. Signing off, this is Ron Robbins.